when we're invested, we're often looking for strong, positive growth. So we're looking for a chart that is going upwards and to the right. And when we're looking for that type of chart, we're looking really not at something that's going so much like this. This is going up and to the right, but it's going up in a very jagged way. And in the last couple of years as well, it's gone sort of sideways and it's gone down a bit. Now, if we're looking for really great performance, why would I be looking at this company? Now, this is Realty, and this is one of the granddaddy for many investors who are interested in dividends and income. Stick with me to the end. I'm going to explain a little bit more about why this can be a very attractive investment, and I'll look at another really great company as well for long-term buy and hold dividend and income investors. So my friends, let's get into it. So when we look at this company, there's a couple of key things to note. It's got a starting dividend yield of 5.66%. It's got an analyst scorecard here of 100% hits in both 1 and 2 years out, specifically there with the FO or the AFFO cases, it is doing very well indeed. Now, as I put this blue line on, we can see that this company has traded at a normal price to AFFO ratio of 0.5, and this is similar to the price to earnings ratio that we'd look at for a regular industrial stock. This is a real estate investment trust, and so we use a funds from operations or an adjusted funds from operations metric here as part of the price to AFFO ratio. So is this fundamentally a good buy? And the answer is it's hard to say. But what we can say is if we look at the performance tab and we look at how that has changed over the year, I like to go down here on fast graphs and I like to look at this. And we can see here in terms of a comparison to the SPY from the period from 2007 to 2024, Realty Income's return compound growth rate of 9.8% per year compared to the SPY's 10.25%. Now, one of the key distinctions here, though, is also, if you look at this, the total dividends this is all about dividends. And we can see here the amount of income that Realty Income has spun off during this time is phenomenal. Now, at a dividend rate of, say, 5 to 6%, think of it, every year you're almost guaranteed that this company is going to spin off 5 or 6%. Now, that's already halfway to the growth from the S&P 500. As we look down this table as well, we can also see over the years there's been dividend growth that hasn't been remarkable or strong every year, but we're talking a nice single-digit dividend growth in many years. We can also see that the dividend payout ratio has been shifting from the 90s down into the 70s, giving a sense that this is going to be a reliable and secure dividend that they're going to be able to pay out on a regular basis. Does this company look like? And what is the potential going forward? Now, on fast graphs, a couple of things to look at. Number one, in fast graphs, what it does do is it gives us a historical perspective here on analyst estimates, in this case of AFFO. And we can see over the last 6 months that the analyst estimates have been fairly steady with the very, very minor decreases, and that's encouraging. And we know that the company tends to hit the analyst scorecards. Now we can see as well here in the change per year, 2%, 4.5% for 2024, 3.4% for 2025, and just under 3% for 2026 growth. Now, if you take even that 3%, throw on top of that the dividend yield of 5.5%, and automatically we're already at a reasonable rate of return. But, my friends, it gets better because the prices may actually increase. Now, if prices were to increase to hit this target there at 15 times, which I think is reasonable, and if the analyst estimates are right for the AFFO and prices return to a 15 times AFFO ratio, we're looking at total annualized rate of return for about 12.67% overall, and that includes dividends as well as price appreciation. So what else can we look at? We can also look at Ares Capital. Now, Ares Capital is a business development company that basically lends money to companies looking to grow or takes an asset, take an equity position in that company. We can see here on the scorecard, it's a little bit inferior here with a little bit of a miss in the 1 year forward, but the 2 year forward, it either hits or beats 100% of the time when estimating the earning moving forward. Now, business development companies have, in general, a higher dividend yield than real estate investment trusts or REITs. And we can see, though, that prices have tended to sort of go sideways. So they're not really seeing a lot of price appreciation there. So the question is this a good investment, and can this be a good investment? So again, if we switch over to ARCC's performance tab, there's a couple of key points here. Since 2004 to 2024, so the last 20 years, Aries Capital has compounded at 11.3%, which beats the S&P 500's 10.2%. Now, the key point here is, like Realty Income, that the company here is spinning out a huge amount in dividends, which we're reinvesting. So we're talking about a substantial amount more in dividends. Now, the dividend growth rate has been spotting. So it's not the instant grower like Realty Income is, but it does a good job of bringing home the money. Casting calculator. The companies, like a business development company, tends to trade at a lower price to earnings multiple. So if we look at what it's traded at over the last 5 years on average, traded at 9.5. Now, in a similar way, what I want to do is I want to go and look at the estimates from analysts over the last 6 months, and there's been some slightly positive changes, but very little. And despite the fact that if we look out forward at a 9.5 times price to earnings multiple, representing, a very small increase from where we are today, the fact is that the earnings are expected to decrease. And so we're actually seeing here a decrease in growth, and yet a total annualized rate of return of 7.7%. Now, that 7.7% is going to be driven here by that dividend yield. So I'm not expecting growth to expand. In fact, I'd expect the value of the shares here to decrease slightly, but the increase and the flow of dividends is going to more than counteract that. And that, friends, is powerful. Now, switching over to the Koifin platform, it lets me get close and personal and gives me many different displays as well that simply doesn't handle or produce. Now, for example, here we can see the dividend payments over the last 10 years for Aries Capital, and I'm switching this to the total record, and we can see a bit of a blip there that looks like it could be a data error, but otherwise fairly consistent levels of dividends, and we know that the share price also rolls over at a fairly consistent looking share price. And so it hasn't really gone high, it hasn't really gone low. There's been big fluctuations where in the pandemic, for example, it dipped down to $8 a share. It's currently $21. And in the global financial crisis, it was down here into being $3.50 or even lower. So showing a very high level of distress and concern from investors and venture investors. So there have been big price fluctuations. Now, obviously, if we bought at this time in the global financial crisis, we would be doing well holding till today. Or similarly, in the COVID crash, we'd do well with that price situation. But even without price appreciation, the question is, can we do well with this type of company? Now, down here, as I have plotted on the S&P 500 here, and in this lighter color with a line, shading underneath it. And I've got Realty Income here as well over the 20-year period. Now we can see this is the total performance. So this is borrowing back those dividends and reinvesting them into Realty Income as they go. And similarly for the start. You can see despite the massive tech boom there driving the spine much higher, a patient 20 years ago would be outperforming an investor in a spine. In a similar way, if I put on Aries Capital, we can see a very similar pattern to investing in Realty Income. And we can see that again, it's got this strong performance growth. While Realty Income's struggled with some price decreases in the last couple of years, we can see that Aries Capital has generally powered all. And again, in comparison to the S&P 500, if you stopped reinvesting the dividends at this time, you would have a large number of dividends and also be very nice. And this, my friends, is why I like to invest part of my portfolio in companies like Realty Income, which is a real estate investment trust with a reasonable dividend yield, or Aries Capital, which is a business development company with a very high dividend yield, but not much capital appreciation and growth in the dividends. Now, as a disclosure, I currently do not have a position in Realty Income or in Aries Capital. I do invest in these types of companies, but my preference is for some of the other holdings in these sectors. Now, this next video will outline some of the recent changes that I've made, particularly looking at one of the alternatives to Aries Capital. And I think you'll learn a lot if you watch this video and understand why I've made the switch to this other business development company. I'll see you on the other side.